Let's get more with Fast Money friend Gene Munster. Gene, you heard the conversation here. Where did it come from? And to Tim's point in terms of lumpiness, this looked like a great quarter, but we don't know. We have no idea what next quarter is going to be. And that's sort of the roller coaster ride that I guess investors have to just expect.
Yeah, I want to put a little bit of context on next quarter is that they did give some guidance related to what the revenue is going to look like. They said that they expect deliveries for 2024 to be up slightly. That basically implies 10% growth for the December quarter for deliveries. The street was at 0.5, so call it 1% growth. So their outlook for December was a surprise. I was expecting the profitability to actually be below the street. I was not expecting them to move up. So as somebody who's optimistic about this caught me by surprise, kind of the strength in these numbers. I do want to highlight an important point on the profitability. The 17.1%, that auto X credit number, that critical number that we've all been talking about, that did have a benefit, a one-time benefit of some of the Cybertruck FSD recognition. We'll hear on the call how much that impacted. So I suspect that there's going to be some dial back on that. Either way, it still likely will have beaten where the street was expecting for the margin number.
What's your number one question going into this call?
Number one question is what this new vehicle looks like, and ultimately, is it just like a adjustment to Model 3? That's what I'm going to be focused in. Are they going to give any color? The reason they didn't talk about that at the We Robot event, they don't want to show an image of a new vehicle coming and slow existing sales. So it makes sense that they held it to this forum and hope to get some context in terms of what that vehicle actually looks like.
Should we assume that this is basically, it uses the same sort of chassis or parts as the Model 3, so as not to have to, create a whole new line in a factory or mold entirely whole parts?
That's generally where consensus is at now, is that they're going to have to use the existing. They don't want to, as you said, kind of spin up Giga Mexico. That's probably not going to happen. That would be the case if they were making progress on Giga Mexico, which they're not, for kind of a smaller two-seater. So I think it's optimistic to think we're going to see that. Initially, I thought maybe because they're building some of them for the Cybercab, but I think that investors should probably put their head around a stripped-down Model 3 here to get to this. I like what Dan said. They're not going to hit the $25,000. It's probably going to be $30,000. But keep in mind, this is the part that blows me away and that I think investors should be contemplating here. They've cut their costs by 6% year over year on doing EVs. They're making money on EVs. Other car companies are retreating. They're doing that with some of these lower cost vehicles. ASPs are down 6%. What this all means is they're doing all the right things to prepare for the future, to build electric cars. And I think this is still a major problem for traditional auto. How are they going to solve this when they're not investing in production of EVs?
Hey, Gene, it's Karen. Thanks for being on today. What are you expecting to hear about China?
It's kind of fallen below the fold here. And so it ultimately, I think what's most important is that they see growth in China. And so when are they going to see growth? That has been a headwind. So call it China's about 15-17% of overall units right now. And so it's important. I like to hear about growth, but it kind of falls below the fold.
Hey, Gene, so you talked about that margin improvement benefiting from cost of goods sold coming down. Like, how do they get there? If you think about, raw materials and shipping and all this sort of stuff, have they come down that much that would help, the margin? So just help me with that, because, again, in a year where you're going to have deliveries, in line to probably a little bit less, how do you get that leverage? I'm just curious.
So one way you get it is by improving production and the efficiencies around the Cybertruck. That's been a huge drag. So by just streamlining that, you get some of that benefit. So keep in mind, the ASPs are down 6% year over year, and the cost per vehicle is down 6%. So not only did they lower prices, average price now of a Tesla is $42,000. Average price of a new car in the U.S. is $47,000. So to answer your question, Dan, how did they get there? And the answer is that I think a lot of it was related to what's happened with Cybertruck.